Dreaming of monthly income? Can QQQM, the popular NASDAQ 100 ETF, pay you consistent monthly dividends? We'll uncover the truth about its strategy and if it aligns with your income generation goals. Let's find out. First, let's understand QQQM, the Invesco NASDAQ 100 ETF. QQQM is an accessible version of QQQ, primarily designed for long-term investors tracking the NASDAQ 100 index. This index comprises 100 largest non-financial companies on NASDAQ. Think tech giants like Apple, Microsoft, Amazon, Google, and Nvidia. Renowned for its high growth potential, QQQM concentrates on innovative, market-leading tech companies. Its primary objective is capital appreciation, growing your investment through these businesses' success. These companies typically reinvest profits into research, development, and expansion, not large dividends. Understanding this core objective is crucial. Many mistakenly believe popular ETFs like QQQM offer substantial dividends, but that's not the case with growth-centric funds. We must align expectations with the fund's design. QQQM's performance is directly tied to the collective success of these 100 companies, historically impressive for capital growth. Growth and income are distinct objectives. QQQM predominantly leans towards growth. This distinction profoundly matters for anyone seeking regular cash flow from their portfolio. Now let's directly address QQQM's dividend aspect. Yes, it pays dividends, but here's the catch: it distributes them quarterly, not monthly. This immediately challenges its role in providing consistent monthly income. Furthermore, QQQM's dividend yield is historically quite low, typically hovering around 0.5 to 0.7%, sometimes even lower. For instance, a $10,000 investment might yield approximately $50 to $70 annually, dispersed in 4 small installments. This yield is minuscule compared to dedicated dividend ETFs. NASDAQ 100 companies are primarily growth stocks. They prioritize reinvesting profits into their operations, R&D, expansion, acquisitions to fuel future growth and innovation. This strategy effectively drives capital appreciation, but inherently limits dividend payouts. Thus, QQQM is far from a high-yield, frequent income generator. It's essential to examine underlying holdings' dividend policies to avoid misaligned expectations. This low yield and quarterly schedule are fundamental characteristics. Investors prioritizing monthly income need to look beyond QQQM's direct dividend stream for their primary source of consistent cash flow. Given its low yield and quarterly distribution, QQQM isn't designed as a primary source of monthly income. If your goal is consistent cash flow, relying solely on QQQM will likely disappoint. Income-focused investors typically seek ETFs or individual stocks with much higher dividend yields, often 3 to 5% or more, preferably with monthly distributions. Consider real estate investment trusts, utility stocks, or specific covered call ETFs explicitly structured for regular, higher income. QQQM's strength lies in capital growth. Its long-term performance comes from the appreciation of its underlying tech holdings, not robust dividend payments. Trying to force QQQM into a monthly income strategy is like using a sprint car for long-haul trucking. It's simply not built for that purpose. Generating $1,000 per month from QQQM's current yield would demand a multi-million-dollar principal investment, which is simply unrealistic for most individuals seeking supplemental income. It's vital to match your investment vehicle to your objective. If income is paramount, QQQM should not be your main choice. Understanding this distinction prevents financial missteps and helps build a tailored portfolio. Identify your financial goals, then select appropriate tools for those goals. However, advanced, more active strategies could potentially generate monthly income using QQQM, albeit indirectly. One method involves selling covered calls against your QQQM shares. If you own at least 100 shares, you can sell call options, generating premium income up front. This strategy can be executed monthly, market conditions permitting. The trade-off, selling calls, caps your upside if QQQM's price surges past your strike, as shares might be called away. This requires deep understanding of options trading, risk management, and volatility. It's not passive and complex. Another approach, combine QQQM with other income-producing assets in a diversified portfolio. Allocate QQQM for growth and high-yield dividend ETFs or monthly-paying stocks for income. This creates a blended portfolio for both. QQQM remains a powerful growth engine. Other assets provide income. This offers flexibility, customizing income without forcing QQQM into an unsuitable role. Remember, option strategies carry inherent risks and require significant education. Do not dive into covered calls without thoroughly understanding mechanics, potential gains, and potential losses. These are sophisticated tactics. So, if QQQM isn't ideal for direct monthly income, what is its best use for most investors? For QQQM, the real power lies in compounding. Its small quarterly dividends are best immediately reinvested back into more QQQM shares. This allows you to accumulate additional shares over time, benefiting exponentially from the NASDAQ 100's capital appreciation. This significantly amplifies your long-term growth potential. The core focus remains on accumulating substantial wealth through market appreciation. QQQM is a fantastic tool for long-term growth-oriented portfolios, perfectly suited for investors prioritizing significant capital gains over immediate cash flow. If monthly income is your absolute priority, consider exploring dedicated high-yield income ETFs, specific real estate investment trusts, or established dividend growth stocks explicitly structured to align with that objective. These vehicles are designed for consistent, higher payouts. Don't compromise your growth potential by trying to extract income from an asset designed for a fundamentally different purpose. To construct a diversified portfolio balancing growth and income effectively, remember the importance of meticulously matching the right investment vehicle to your precise financial goals. Researching diverse asset classes and thoroughly comprehending their inherent characteristics is absolutely fundamental. To deepen your understanding of how various ETFs can seamlessly integrate into a truly comprehensive investment strategy, especially those intensely focused on generating more substantial and frequent income streams, consider watching our dedicated video on the top 5 monthly dividend ETFs for consistent cash flow. It will provide a clear, actionable roadmap to achieving your specific income goals.